It's 11:47 p.m. You're in bed, lights off, phone face down on the nightstand like a promise you made to yourself, and then your brain whispers, just check, real quick. Not because you need to, not because anything in your life will change in the next 30 seconds, but because the market trained you to believe that if you don't look, you're irresponsible. So you reach for the phone. One headline turns into 5. One chart turns into 10. Futures are red. Someone is screaming recession. Someone else is tweeting a clip of a CEO saying uncertainty. A talking head is warning about inflation, interest rates, the Fed, geopolitics, earnings season, the next crash, the next bubble, the next once-in-a-lifetime opportunity. And suddenly, you're not in bed anymore. You're on the edge of a cliff, staring at your portfolio like it's a life support machine. Your heart rate goes up, your sleep goes down, and somewhere inside you, a pressure builds. I should do something. If that's you, tonight isn't a pep talk. Tonight is a reset. Because the most expensive habit in investing is not picking the wrong stock. It's letting the market rent space in your mind. And the most underrated skill in building wealth is not predicting what happens next. It's learning how to do nothing on purpose, not lazy nothing, not ignorant nothing, Graham nothing. The kind of nothing that protects your capital, your self-respect, and yes, your sleep. By the end of this video, you'll have a simple way to filter headlines, stop reacting to daily price moves, and build a calm, process-driven investing mind that doesn't collapse every time Mr. Market changes his mood. Because that's what this is. A relationship problem. Not with money, with quotes, with noise, with a character Benjamin Graham introduced decades ago. And somehow, he feels more alive today than ever. Mr. Market. Every morning, he shows up at your door. Sometimes, he's euphoric. He's shouting, laughing, throwing confetti, telling you that you're a genius, and that everything will go up forever. Sometimes he's depressed. He's trembling, pessimistic, certain the world is ending, begging you to sell everything before it's too late. He's not stable. He's not wise. He's not your teacher. He's a salesman. And his job is simple, to offer you a price. That's it. He doesn't offer you clarity. He doesn't offer you peace. He doesn't offer you truth. He offers you a number drenched in emotion. And here's the trap. Most people confuse Mr. Market's mood with reality. They treat his anxiety like a forecast. They treat his excitement like confirmation. They don't realize they're not investing. They're negotiating with a manic stranger every single day. And then they wonder why they can't sleep. Let's say something that might sting a little, but it can set you free. If prices control your mood, they will eventually control your returns. Because the market doesn't need to steal your money directly. It can just steal your patience. It can steal your discipline. It can steal your identity. It can turn you into the kind of person who always feels behind, even when you're doing fine. So let's talk about the real villain. Not volatility, but what volatility does to you when you're untrained. The modern market is loud on purpose. It's not an accident that your phone can show you prices every second. It's not an accident that headlines are written like sirens. It's not an accident that every small move becomes a crash or a rally or a shock. Attention is a business model. Anxiety is a product. And if you don't build defenses, you will become the customer. You'll pay with your peace. You'll pay with your decision quality. You'll pay with the most valuable investing asset you have, time. Because compounding is not just math. Compounding is behavior. It's the ability to hold a good plan through boring months, scary weeks, and humiliating days. It's the ability to let time do the heavy lifting, while your ego gets bored and tries to sabotage you. Now, here's the part that most people don't want to hear. The market doesn't make you do anything. The market offers. You choose. Mr. Market knocks. You decide whether to open the door, and doing nothing is a decision, a powerful one, but only if you understand what you're really doing, because doing nothing isn't a blank space. It's a structure. It's a rule set. It's a mindset that says, I do not react, I evaluate. And the evaluation is not based on the day's mood. It's based on value. In Graham's world, price is a quote. Value is a conclusion. Price is a shout. Value is a whisper. And most people spend their lives listening to the shout. They think the shout is information, but the shout is often just emotion with a volume knob. So how do you learn to ignore Mr. Market? Not by becoming numb, not by pretending you don't care. You ignore him by becoming selective, by building a filter so strong that noise doesn't even feel like noise anymore. It just feels irrelevant. Here's a mental picture. Imagine you own a small business, not a stock, a real business, a coffee shop, a plumbing company, a regional manufacturing firm. Now imagine someone stands outside your business every day and screams a different number at you. Your business is worth $1 million today. Tomorrow, it's worth $600,000. The world is ending the next day. It's worth $1.3 million. You're a genius. Would you sell your business every time that person screamed? Would you buy more just because they were excited? Of course not. You'd call them unstable. You might even call security. But in the stock market, that same person has an app, and we invite him into our bedroom at midnight. This is why Graham's thinking is so modern. It's almost unfair. He didn't teach you how to outguess the market. He taught you how to outgrow it. He taught you that the intelligent investor is not the one with the best predictions. It's the one with the best temperament. And if you want to sleep again, you're not searching for the perfect stock. You're building the right relationship with uncertainty. So let's make this practical. From this point on, every headline you see gets one job interview. It does not get to enter your mind and move furniture around. It gets 3 questions, only 3. If it fails them, it doesn't deserve action. It deserves silence. Here are the questions. Question 1. Does this materially change the long-term earning power of the business I own or want to own? Not, will the price dip tomorrow? Not, will Twitter freak out? Long-term earning power, the thing that actually creates value. Question 2. Does this materially change the balance sheet, the survival risk, the ability to endure a bad cycle? Because the market doesn't kill you with volatility. It kills you with fragility. A business with too much debt, weak cash flow, poor liquidity. Those are the businesses that don't survive storms. So if the headline doesn't change survival odds, it's probably noise. Question 3. Does this materially change my valuation range and my margin of safety? Not my hope, not my fear, my valuation, my range, my safety buffer, because Graham's entire philosophy can be summarized like this. You don't need certainty. You need safety. If a headline fails those 3 questions, you do not act. You do not do something. You do not trade your peace for the illusion of control. You do nothing. And yes, this is where the thumbnail becomes real. Do nothing. Win more. But let's be honest, that sounds like a meme until you understand it. So let's translate it. Do nothing means do nothing impulsive, do nothing reactionary, do nothing that treats a headline like a command. Win more means preserve capital, preserve patience, preserve your ability to stay invested, and avoid the self-inflicted wounds that destroy long-term returns. Because the biggest losses are often not from owning businesses through volatility. They're from selling them at the worst moment, because you couldn't tolerate the feeling. And the market is very good at selling feelings. Now, you might be thinking, okay, but what if the news is real? What if it matters? Good. That's the right question, because intelligent investing is not ignoring reality. It's ignoring theater. So here's the next layer. You need a rule for when you're allowed to touch your portfolio. Most people treat their portfolio like a steering wheel. They grab it every time they feel nervous. But a long-term portfolio is not a sports car. It's a ship. And if you change direction every time you feel a wave, you don't become safer. You become lost. So you need an operating system. Here's a simple one you can actually live with. First, set price check. Windows. Pick one. Weekly, bi-weekly, monthly. For most people, especially if you're building wealth through a 401k, a Roth IRA, broad ETFs, index funds, a diversified set of businesses, daily checking is not diligence. It's self-harm. Daily checking doesn't make you informed. It makes you reactive. So decide, I check prices on Friday afternoon. Or I check on the first of the month. Or I check once a week. And outside that window, you don't check. Not because you're hiding, because you're training. You're training your mind that your plan is bigger than your feelings. Second, create a decision quarantine. Any buy or sell decision triggered by news must wait 24 hours minimum. Why? Because the part of your brain that panics loves immediacy. It wants relief. It wants action. It wants to feel like you're in control. But the market is a place where immediate action is often expensive. A 24-hour delay is not a trick. It's a filter. It separates emotion from judgment. Most impulse decisions die in quarantine, and that's a good thing. Third, build a one-page investing policy for yourself. Not a novel, a page. 5 to 10 lines, your rules, your identity, something like, I invest for long-term ownership, not short-term prediction. I will not sell because of headlines. I will only buy when I can explain the business. And I believe I have a margin of safety. I diversify because I respect uncertainty. I accept volatility as the price of admission. I measure progress by process, not by daily quotes. This is not paperwork. This is self-respect in written form. When you write rules, you stop negotiating with yourself every day. You stop being the courtroom where fear and greed argue all night. You become the judge. Now let's deal with a deeper truth. A lot of people can't sleep because they're not just hearing noise. They're holding risk they don't understand. They bought stories. They bought hype. They bought momentum dressed up as conviction. They bought this is the future without asking at what price and with what margin of safety. So let's say it plainly. If you can't sleep, the market might not be the problem. Your position sizing might be the problem. Your leverage might be the problem. Your lack of margin of safety might be the problem. Your concentration in something you don't truly understand might be the problem. The market is loud, yes, but it's loudest when you're exposed. That's why Graham's margin of safety is not just a valuation concept, it's a life concept. Margin of safety is how you build a financial life that can survive your own mistakes. Because you will make mistakes. Everyone does. The goal is not perfection. The goal is survival. The goal is a portfolio that doesn't require heroic behavior to hold. A sleep at night portfolio is not built by courage. It's built by design, and design begins with honesty. So here's a question that can change your investing life. Are you a defensive investor? Or are you trying to be enterprising without doing enterprising work? Benjamin Graham made a clear distinction. The defensive investor seeks soundness and freedom from effort. The enterprising investor seeks value through intelligent effort. Both are valid. What is not valid is wanting enterprising returns while living like a defensive investor. No study, no valuation, no discipline, just vibes and headlines. That's not investing. That's a lottery ticket with a spreadsheet. So choose who you are. If you're defensive, and most people should be, your edge is not cleverness. Your edge is consistency. Your edge is asset allocation, diversification, low costs, steady contributions, and the refusal to be emotionally bullied by Mr. Market. If you're enterprising, your edge is not excitement. Your edge is analysis, valuation, patience, and a margin of safety so thick it feels boring. Either way, your edge is not reacting. Your edge is process. Now let's talk about the pressure you feel to do something. That pressure has a name: action bias. It's the human tendency to believe that action equals control. When something feels uncertain, the mind looks for movement, even if movement is harmful, even if movement is random. That's why people trade more when volatility rises, not because it's smart, because it reduces anxiety for a moment. It gives the illusion of relief, but the market charges a fee for that relief. Sometimes that fee is obvious: taxes, spreads, commissions. Sometimes it's invisible: selling a great business too early, buying back higher later, missing the recovery because you needed emotional comfort. This is why do nothing can be a wealth strategy, because do nothing is often the only move that has zero fee. And it's usually the move that prevents you from paying the most expensive cost of all: the cost of abandoning your plan. So when you feel that itch, when you feel the urge to check prices again, to read one more headline, to make one more adjustment, pause and ask, what am I really trying to get right now? If the answer is certainty, you're in trouble. Markets don't give certainty. If the answer is relief, you're about to make a decision for emotional reasons. Instead, ask a better question. What would an intelligent investor do right now? And the answer, more often than not, is not predict. It's prepare. Preparation is boring. Preparation is not viral. Preparation doesn't get retweets, but preparation is what lets you sleep. Because when you've prepared, you can afford to ignore. And that brings us to the most important sentence in this entire video. Doing nothing only works when you've already done the right work. So what is the right work? In Graham's world, the right work is simple, but not easy. It's understanding that a stock is not a symbol. It's a piece of a business. It's studying the business enough that you don't confuse temporary price swings with permanent impairment. It's respecting the balance sheet. It's demanding a margin of safety. It's refusing to pay any price just because a story sounds inevitable. It's building a portfolio that can endure a bear market, a correction, an ugly year, an ugly decade, without forcing you to become someone you don't recognize. Because let's be real, people don't just lose money in the market. They lose dignity. They lose trust in themselves. They look back at their own decisions and think, who was I? The goal here is not just wealth. It's becoming the kind of person your future self can respect. So let's build a simple Mr. Market protocol you can keep forever. Step 1. Reduce your exposure to noise. This is not weakness, it's wisdom. Turn off push notifications. Remove the app from your home screen. Stop keeping charts on your lock screen, like a heartbeat monitor. If you need your brain for your job, your family, your health, stop donating it to market drama. Step 2. Replace scrolling with a ritual. When you feel the urge to check, do a substitution. Write one sentence in a note. Mr. Market is offering a price, not a prophecy. Or, my job is not to react. My job is to follow my process. Or, price is what I can pay. Value is what I must understand. One sentence. That's enough to break the trance. Step 3. Keep a decision journal. Whenever you want to buy or sell, write down. What's my reason? Is it valuation based? Is it based on fundamentals? Or is it based on fear, FOMO, and headlines? Most bad decisions collapse when exposed to writing, because writing is slower than emotion. And intelligent investing is slow on purpose. Step 4. Define your true emergencies. A true emergency is not a red day. A true emergency is not a scary headline. A true emergency is something like, my thesis is broken. The business is permanently impaired. My balance sheet risk assessment was wrong. My margin of safety no longer exists. If it's not one of those, it's probably not urgent, it can wait. And if it can wait, your sleep can stay intact. Step 5. Make peace with volatility. This is where most people secretly fail. They say they're long-term investors, but they want short-term comfort. They want stock-like returns with bond-like feelings. But the market doesn't work like that. Volatility is the admission ticket. You pay it so you can participate in long-term growth. And if you keep asking for a refund every time the ride feels bumpy, you'll spend your life stepping on and off and wondering why you never get anywhere. The defensive investor accepts that prices fluctuate. They don't interpret every fluctuation as a message. They interpret it as weather. Sometimes storms come, sometimes skies clear, but you don't sell your house because it rained. You don't rebuild your retirement plan because the week was ugly. You endure because you designed for endurance. Now let's address the modern fear that sits under all of this. It's not just what if the market drops, it's what if I'm the only one not getting rich fast. You see people online acting like they found the cheat code. You see hype cycles, meme stocks, crypto manias, AI narratives, whatever the trend is this month, and it triggers something deep. Envy, impatience, a sense that you're falling behind. But that feeling is dangerous because it makes you forget what investing is actually for. Investing is not a contest to impress strangers. Investing is the quiet construction of a future that doesn't depend on your mood. Investing is freedom from being forced to work forever. Investing is the ability to handle emergencies without panic. Investing is dignity in old age. And Graham would tell you, the market is not a place to prove your intelligence. It's a place to practice your discipline. So when you see the hype, don't argue with it. Don't fight it. Just remember this. Hype is fast. Wealth is slow. Hype is loud. Value is quiet. Hype demands your attention. Value demands your patience. And patience is not passive. Patience is active restraint. Patience is strength under silence. Patience is you. Looking at Mr. Market's drama and choosing not to participate. Do nothing. Win more. Now, I want to return to where we started, because this isn't just about finance. It's about your life. Your sleep is not a small thing. Your nervous system is not a small thing. Your ability to think clearly is not a small thing. And if investing is turning you into someone anxious, impulsive, and exhausted, something is wrong. Not with investing, with how you're doing it. So picture it again. It's late. You're in bed, phone nearby. The urge rises. Just check real quick. And here's what changes tonight. Tonight, you don't treat that urge as a command. You treat it as a signal. A signal that Mr. Market is knocking. A signal that your brain wants comfort. A signal that your old habits are trying to reclaim control, and you respond. Like an intelligent investor, you take one breath. You ask your 3 questions. Does this change long-term earning power? Does it change survival risk? Does it change valuation and margin of safety? If not, you smile because you recognize it. It's theater. It's noise. It's Mr. Market doing what he always does. Then you tell him calmly, not today. Bring me a better price. Or bring me nothing at all. Because I don't need your mood to run my life. I have a plan. I have rules. I have an identity. I'm not here to be entertained. I'm here to build. And that's the moment you start winning. In a way most people never experience. Not because you predicted the next move, but because you stopped letting the next move predict you. So if you're looking for a sign to stop doom scrolling, this is it. If you're looking for permission to stop reacting, this is it. If you're looking for a simple philosophy to protect you from your own worst impulses, here it is. Ignore the noise. Obsess over your process. Demand a margin of safety. Think like an owner. Choose defensive honesty over enterprising fantasy. And when Mr. Market gets dramatic, when he begs, when he flatters, when he threatens, remember, he is there to serve you, not to lead you. The market can be loud. You don't have to be. Do nothing impulsive. Do everything intentional. And if you want daily notes like this, notes that train temperament, build discipline, and help you invest like a true, intelligent investor, subscribe, not for stock tips, for a calmer mind, for a stronger process, for the kind of investing life that lets you sleep again. Because the real flex is not catching every move. The real flex is building wealth while living in peace. Do nothing, win more.